Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I know I was supposed to have been taking the day off, but I just took a peek at the market and saw that the Dow was down like 1,000 points. And I'm like, OMG, what's going on? One day, the day I want to take off. So here's what's going on with the market. Of course, you know, the Fed spoke yesterday in the FOMC meeting. And remember how he gave the market what it was already priced in, and that was 50 basis points, right? He didn't do 75, and the market went up and then it went down, it tanked, right? But remember how we always say it takes time for the market to just kind of decipher through the information. And then what we noticed was, and he made the statement that they're going to continue with interest rate hikes into 2023. At first, February, I believe it's February 1st, which is the next FOMC meeting, 25 basis points was already baked in. That's what he said. The Fed really hasn't changed from the last FOMC meeting to now. But what did change is he's going to continue to raise interest rates next year in 2023. So the market does not like that. It is reacting negatively to that because he was going to go neutral. Now he's not going to go neutral. He is going to continue to raise interest rate. So just think about this. If you had if you were to buy a $300,000 home right now today, it would, as opposed to a year ago, it would cost you an extra $500. If you bought a $300,000 house, you know, fixed, it would add another $500 to your mortgage payment. And that's a make or break deal for most people, right? And so that's what's happening. Also to earnings for 2023. So, you know, these companies are going to start lowering earnings in 2023. What does that do? That lowers multiples. So now the PE ratio of these companies have to come even lower. It kind of trickles over, meaning that the market has further to sell off, right? So I recorded this video that you're about to hear from my phone, just like I'm recording this from my phone. I want you guys to listen real clearly to this entire clip because I agree with it and it shows where we're headed.
Joining us right now is Mike Wilson. He's the Chief Investment Officer and Chief U.S. Equity Strategist for Morgan Stanley. And Mike, I guess you would say that today and tomorrow's news has to do around earnings.
That's right. I mean, look, the Fed and the CPI, I mean, that was the story in October. It's interesting, the price action, right? So in October, the downtick in CPI was a surprise. We got a big rally off of that because rates came in. But to think you're going to get another rally on that news, I think is, you know, a bit naive because you already had it, right? You're going to get another rally on that. So I think what we can say about this week's data, CPI's peaked, inflation's peaked. We're pretty confident it's going to come down pretty hard next year. And the real question is, what does that mean about growth? And that's the second part of our bear market story that we've been talking about for almost 12 months now. The growth slowdown is not yet priced. And that's what's going to determine the winners. Like, it's a stock picking game. I mean, there are going to be some companies that deliver on that. But at the index level, we're pretty pessimistic that we can support these prices given our outlook on earnings next year.
I mean, pretty pessimistic is putting it lightly. Your consensus for S&P 500 earnings for 2023 is 16% below the consensus. That would mean a long way down because usually it's a big deal if you move 2, 3, 4%.
That's right. We're not looking for a 5% miss. We're looking for, 15 to 20% potentially. It could be that significant. Now, the good news, Becky, is that most investors agree. Okay, like the market, this is not new news. I mean, people assume earnings are going to come down, but it's the magnitude of that decline and how fast that's going to happen. We think that's where the surprise is, that the negative operating leverage that we see from falling inflation, by the way, is what's going to hurt margins, and that's irrespective of whether we have an economic recession.
There are some people who have said, yeah, we've heard this story before. We heard there was going to be an earnings recession. What has it been, 3 times now? And every quarter, the numbers have been pretty good. Why do you think that this is when the rubber really hits the road?
Yeah, this is always the trick. So I would say some companies are already in an earnings recession. So what we know is this year, every quarter has been disappointing, but we haven't yet gotten the guidance on 2023 because companies have no reason to talk about 2023 until we get there, right? They keep deferring that. But in January, they're going to have to address that. And that's why we think this is the quarter where you'll get a bigger step function lower on forecast for 23. And that will create the final, kind of plunge on multiples that can give us a real buying opportunity.
Mike, you have been pessimistic for a while, but not brutally pessimistic without any signs of life for things. There are moments where you've said, yeah, we're gonna see some gains, and we have recently.
Yeah.
You're just following the markets up and down based on where you think they should be for the numbers?
Yeah, well, that's our job, right? We're a bit of a fortune teller.
I know, but a lot of people don't do it. They have one opinion and they stick with it.
Yeah, we have to, we have to try and trade. When you get a 15% rally, you got to try and catch it. This one we got. Okay, we don't always get it right. We felt like the rates were going to come down, that the Fed is yesterday's news. This is now known. The bear market has been driven by Fed policy, higher rates, concerns about inflation, multiples have contracted. So we got relief on that, and that's why we rallied. But that's a trade because ultimately stocks will care about the earnings decline as much as they care about the Fed pausing or even continuing for another couple months.
And so there's a multiple things that are happening. Tech is going to continue to tank. It's going to suffer. For those of you that have these, that's in tech and these low cap tech, you got to be careful if you're in the EVs, that type of deal. Remember, these companies have to have enough money to make it through, the hard recession of 2023. We're already in a recession. And so the market is fearful. There again, I believe the market is overreacting. So here's another thing that I want you to look at. Look at Tesla. Remember, I said when Tesla was high, I said 185, but boom. Then I lowered that 185 to 150, right? And so what I'm going to tell you is I see Tesla bottoming out. I see Tesla's bottom at really 128-ish, but that doesn't mean it's going to bottom out at 128. So I would start buying Tesla under 150 to 130. So, but under 150 down to 130 is where I would just buy if you plan on holding Tesla, for 5 years. And that's what I'm going to do. So remember, I abandoned 185. I'm down to under 150, and I wouldn't go in heavy at 150. As a matter of fact, you heard the gentleman, the S&P could really, really tank. Here's another way if money is just burning a hole in your pocket and you just got to be in the market. That has been consistent. Always before the FOMC meeting, the market jumps green, right? And then when the Fed talks, and as long as he talks on most of them, the market tanks down. So what could you do? You could do a TQQ play and an SQQ play at the same time. So what do you mean? So just the day before, I used to do it the night before that the Fed is going to talk during the FOMC meeting. I do a TQQ play, right? So I do the regular TQQ, which is a triple leverage, but then I also do a TQQ option, right? And then right just before he starts talking, I don't risk him talking. I get out of those plays, right? And I make my little money and I grab. Then if the market runs up when he starts talking, this is very risky, but I've won 4 times on it. Then I do an SQQQ play right when it goes up because of price action. And what I do is I do an SQQQ put. So you're betting that the market is going to go down. This yesterday when he was talking, I was in 0 position. It was just too risky. And I'm glad I didn't do it. Well, I would have made money had I done it. But there comes a time in trading that we just need to sit still. You heard the gentleman. I've been saying it all year. We have literally very low discounted pricing on all of these stocks, all of these companies. will be at a better value because of earnings in 2023. And I personally believe now it'll be in the first 4 months. I was saying in the first half of the year, I believe it's going to be in the first 4 months. The truth be told, I believe it's going to be in the first quarter. That's just a prediction. That doesn't mean it's going to happen. All right, good people. Now I will see you guys tomorrow. Thank you so much for your encouragement. I am doing a whole lot better. I love each and every one of you guys, even the ones I disagree with. I love you guys too. And we're in this for the long haul to make money. All right. Live, love, laugh. Oh, if you haven't subscribed, go ahead and subscribe to the page. And we'll probably see you tomorrow morning. I'm going to see how I'm feeling. I'm going to try to go live tomorrow morning, Friday morning. And then I'll do another video Friday evening. Okay, we'll see you guys tomorrow. Live, love, laugh, and learn.